Can you still make money in real estate even with these sky high prices right now? Stay tuned. What's up, Fruitful investors? Welcome to my channel where, yes, I am a YouTuber, but I'm also a real business owner doing real shit in the background, not just up here talking about it on YouTube. So let's get into it. I made the majority of my money in long-term real estate, so rental property. So I know all about this. I really highly suggest long-term real estate. It is the best asset class to make true wealth. I think some saying is like 90% of real estate, or sorry, 90% of millionaires did so through real estate investing. So it's tried and true. It's been around for thousands of years. It ain't going anywhere. We need housing. Everybody needs a roof over their head so they can chill and enjoy life. So if we can be the provider of that service, dude, it's like foolproof. You will get rich in real estate if you do it right. I'm gonna tell you how to do it right. So now I'm doing more so flipping houses. I did the long-term buy and hold. I'm so glad I did. I made millions of dollars. I sold all the properties, most of them, when the market got crazy, and it's still just getting crazier and crazier and crazier. But at the time I was like, dude, it is so good. This is a once in a lifetime opportunity. I don't think a market cycle is gonna be like this again, not in my lifetime. So I'm gonna cash out and make a ton of money and do my thing of flipping houses now. So that's what I do mostly now, is flipping houses. However, I still have a ton of rental properties. I just don't really buy anymore, too many, but I highly suggest for you to buy long-term real estate if you're just starting off and you wanna build your wealth. I still highly recommend long-term real estate. So number one, you wanna buy with a 5-year minimum intention when you're buying a rental property, especially now with these high prices. They're probably gonna go higher, especially in Canada, just because the demand is there, the economic fundamentals is there, our economy is good. The amount of immigration happening to my area specifically of Southern Ontario is outrageous. Yearly, over 400 to 600,000 people every single year are moving to Southern Ontario. It's like this big on the map. So they need housing. And they're not coming here broke, not most of them. They're not coming here like for refuge or whatever. These people are coming here with money, man. They're successful in Germany, France, like wherever they're coming from to immigrate to Canada. They're coming with money and they're buying real estate, driving up prices. And a lot of them come here also to rent because they want to figure out where they're gonna live. So they rent for a year or 2 or 3, feel out the area, and then they buy. So that's where we want to provide that service of rental properties. So the fundamentals and the demand for housing here is outrageous, and the majority of North America. So I don't see real estate slowing down or having some massive correction. Real estate might slow down when they start raising interest rates. Naturally, people will kind of pull back a bit, but this crash of real estate, dude, probably not gonna happen, especially not in my area. You're gonna be waiting decades and decades and decades, and you're gonna lose out on a ton of money. So, but we still wanna be careful. We still wanna be calculated and strategic. So, minimum of a 5-year plan. Why? If there is a correction or some sort of pullback that was unexpected, you know, I won't say it, but there's something going on in the world right now that's crazy that can shut down markets real quick. I don't want to say it, but it's the C word. Okay, so something like that could temporarily, you know, throw the market into a tailspin. So when you have a 5-year plan, it kind of takes account for stuff like that. Because will real estate be worth a lot more 5 years from now, even with, you know, some crazy pullback? Yeah, you'll at least, very least, probably break even, but I almost guarantee you're gonna make a ton of money. Think back to all the recessions, by the way. The dot-com bubble in 99, 2000, okay, that was like a year long, great, and we were right back to where we started. 2008, crazy recession, a year and a half, max. We were back to where we were. So 5 years is a long time to kind of ride the waves, and the waves kind of do this, okay? They go up, okay? They don't just go down, especially if you're buying in quality areas, which I always talk about, which funny enough is number 2 on my list here. Buy in quality areas that have, I always say this, man, but it's boring, and I'm gonna say it again, economic fundamentals and neighborhood fundamentals. So economic fundamentals, number 1, what does that mean? Is there job growth in the area you're buying? That's the most important thing, is job growth. Without job growth, you have nothing. With job growth, you have everything. It leads to this. It leads to rental demand. When there's jobs, people move to the area to work there. And what do when they move to a new area? They don't likely buy. They rent for a couple years. So that increase on rental demand, which eventually leads to increase in real estate prices in general, because then they become buyers. So there's this whole proven cycle that you need to be focused on when you're buying in a quality area. Does it have jobs, and are people, basically, do people want to live there, okay? So if you're buying in, let's use an example of Toronto, because, you know, my local big market. Are people always gonna live in Toronto? Yeah, there's always gonna be jobs and opportunities there, but you're probably thinking it's too expensive. So I'm gonna buy in this little rinky-dink town, 2 hours, you know, west of Toronto. Okay, well, the market now is good. There's a lot of jobs opportunity now, but what happens if a recession does come? and that town, all they do is make, I don't know, corn. I don't know, dude. It's some country town. Like their only industry is like corn making or something. Well, we don't want to buy there, man, because it's long term, it's not cool. We want to buy in an area that's diverse. That we have education, there's manufacturing, there's education industry. So it's a mixed, diverse industry or area with a lot of opportunity, a lot of jobs. So that's number one. Number two is the neighborhood fundamentals. So in the specific neighborhood in that city that has great economic fundamentals, is there baseball diamonds around the area, or parks, or libraries, or schools, grocery stores, or are you buying in some outside new area that has none of that? So we want to be close to all those things, keeps the family happy, people want to live in a good area within the good city. So you see, we're drilling down and being very, very focused and strategic. So that's number two, buying a good quality area in a good town, and you're setting yourself up for massive success. Number three, we want to buy for cash flow, okay? So the property itself doesn't have to cash flow like $1 billion a month. I wish it did, but it just has to cash flow, period. So for me, when I was buying a ton of long-term real estate for the past 12 years, except for recently, I was focused on single family properties, which is the best quality tenant, the easiest, they're predictable, they have good jobs, they're focused on raising a family, so they set down roots and they stay there for a long time. You can see I was focused on boring. I just want easy, man. But with boring comes low cash flow. So my single family properties were only cash flowing like $100, $150 a month. Now a lot of people watch this video are like, dude, fucking bullshit. I would never buy a property that cash was only $100. How am I gonna retire? Dude, I was playing the long game. I wasn't playing the cash flow game at that time. But as long as property cash flows, it's cool, right? So it just depends on your strategy. If you're focused on more cash flow, you'll probably be buying multifamily properties, student properties, bigger buildings. Okay, so that's more of a cash flow game. I was playing more the equity in the long term and the boring game of single family. So cash flow wasn't like really important to me as long as the property took care of itself and still cash flowed positive $100, $150 a month. That's all I cared about. And also with that strategy, I will say, because I'm gonna get some haters on here, but why the fuck would you buy those? When I bought those single family properties, I renovated them fully, always, right up top to bottom. So there was really no maintenance cost, because people are probably gonna say like, oh, it only cost us $100. What if the tap broke? What if the furnace broke? And you know what I mean? Which does happen. But like I said, I renovated the whole thing top to bottom. So the odds of the tap breaking or the fridge breaking or the cabinets break or whatever, right? Non-likely for the next 10, 15 years, longer than what I'm gonna own the property for. So I was stacking the stats on my side, which is what I always do. I'm just stacking the more probability of me being successful, right? Do what I can. Number four, buy under market value deals. So in a crazy hot market, it's getting hard to buy really good deals. I get it. But again, 5-year plan, doesn't matter. If you buy market value properties today because you're holding it for 5 or 10 years, you're gonna make money, almost guaranteed, so it's cool. But if you want more real deals or under market value deals, totally get it. That's the game I play now for the flips. But that's a whole business in itself. So it's the marketing game, finding motivated sellers, flyering, Facebook ads, Google ads. It's a whole enterprise you're running to get these leads to come in, or you can link up with another wholesaler like me or whatever, who's doing this to get you the deals, but much harder game to play. It's easier to get them for yourself. Or it's just easier to keep it all in-house so nobody else is stealing those deals the wholesalers are finding. But like I said, it's tough, man. You have to spend a lot of money. This is more of an advanced strategy, I would say, or more of a veteran when you're later on. You got a business, you're chugging, you know, you have the money to dispose on marketing, like 10 grand a month minimum, dude. Like seriously, minimum, bare minimum. But you can afford to lose 10 grand a month basically if the deals don't return, because you're making so much more with your business over there. That's the time when you do the in-house wholesaling in a sense, where you're getting your own deals. But anyway, that's what I do. Under market value deals, obviously awesome. We're getting motivated sellers directly. We're not going through a realtor. So for example, if the house would sell with a realtor for 500K, let's say, I'm buying that house directly from the seller for 420, 430. Right? After commissions, if they sold at 500, they would probably net 465 maybe. I'm buying it at 420, 430. Am I buying it even lower? Obviously, but I'm bringing way more convenience to them. I'm buying the house as is. They can just take their purse, whatever they want, and leave. Leave everything else behind, leave all the shit, which is what we always do. Everybody leaves stuff behind. So we're dealing with those types of sellers where they're just like, dude, I just wanna get rid of this house. Just take it off my hands. I know I'm selling it to you a little bit under market value, but you're making it so easy for me. Cool. We're all happy. Everybody wins, right? Number 5, renovate the properties to boost the value more, right? So If you're buying even a market value deal or an under market value deal, we want to renovate that property top to bottom, not only to raise the value of the property to maybe refinance or just keep it there in equity, but also, like I said before, to attract a higher quality tenant and not have so many repairs, right? So I hate phone calls from tenants. The toilet's clogged up and is leaking, the toilet's broken, the fridge broke. Like, I hate those phone calls from the property managers or whatever. So I renovate everything top to bottom. You've seen it on this channel. You know Fruitful style renovations. The house is pimped out, man. We do it all. For the reason of better quality tenant attraction, and more so for me, keeping it boring, keeping it easy. I don't want the phone calls. Happy tenant, happy life for the landlord. So that's what I recommend. Those are the 5 steps on how to crush your real estate business in 2022. I hope you take them. I hope you use them. I hope you steal them, rip them off, and use them for yourself. I hope you enjoyed this video. If you did, smash that like button, hit that subscribe button, and I will see you in the next video.